Hope everyone's having a great day. This is Jay from J&D's Retirement Journey. For those new to the channel, we document our journey into retirement. We talk about investing and saving. Is it worth buying Jepi, the JP Morgan Equity Premium Income ETF, or should we just buy an S&P 500 index fund like the Schwab SWPPX? Let's take a look, guys, at the numbers. As we go into Jepi, the summary here, guys. Total assets, almost 37 billion. Inception date, 2020. So it's relatively new, 4 years out, going on 5. Fund strategy. The investment seeks current income while maintaining prospects for capital appreciation. The fund seeks to achieve this objective by creating an actively managed portfolio of equity securities comprised significantly of those included in the fund's primary benchmark, the Standard & Poor's 500 Total Return Index, and through equity-linked notes, ELNs, selling call options with exposure to the S&P 500 index. As we go over to the Schwab S&P 500 fund, total assets of 109 billion, a lot bigger. The investment seeks to track the total return of the S&P 500 index, and it's been around since 1997. The fund generally invests at least 80% of its net assets in these stocks. Let you guys read the rest. As we go over to the quote, you can see here what they're doing for the year-to-date so far. I guess I went year-to-date. JP Morgan Equity Premium Income ETF Jepi closed at 58.60 as of close of business 1/17/2025. The 52-week range, we're looking at 54 to 60. Hasn't moved really much. Year to date, it's up 1.6997 cents. As we go over to the S&P 500 fund, the Schwab, it's 52-week range. It closed at 92.09. The 52-week range, 73 to 94. As you can see, it's been going up. Expense ratio is pretty low, 0.02. Year-to-date return, 2%. So it's doing a little better than Jepi right now, and it has a yield of 1.22. If you're enjoying this type of content, please remember to hit that subscribe button. It's totally free and it'll really help out the channel. Remember, guys, all this information is right off the Charles Schwab website. Any broker under the research tab, you should be able to do this type of research. And remember, before you buy any type of security, talk with your financial planner. I am not a financial planner. Do your research, guys. Morningstar ratings. We'll start off with Jepi. Overall rating, 4 stars. 3-year rating, 4 stars. Historic return average. Historic risk, below average. S&P 500, the Schwab, rated 5 stars, which is great. 4-star 3-year rating, 4-star 5-year rating. 10-year rating is a 5-star. Historic return is high. Average risk, which is great. As we go over to the growth of a $10,000 investment, and I put it for 10 years, even though Jepi hasn't been around that long, but as you can see, the S&P 500 outpaces Jepi by a bunch. But as we go over here, it compares it just since inception. And Jepi's doing a little bit better, I guess 3 points better, which is a lot actually. But the inception date is 2020, guys. Remember, this fund has been around another 23 years, the S&P 500 fund. So that's a better track record over a long period of time. As we go over to the portfolio makeup here, net assets for Jepi, like I said, almost 40 billion, 131 holdings. Percent of assets in the top 10 is 15.66. As we go over to the Schwab S&P 500 fund, a lot bigger fund, almost $109 billion, 503 holdings. Percent of assets in top 10 would be 37%. And as you could see, the breakdown here of asset allocation, Jepi, 85 in stocks. The other would be the call options. S&P 500 is basically all in stocks. As we go into the top 10 holdings, let's start off with Jepi. You have Meta, Amazon, Train Technologies, MasterCard, Progressive Corp, NVIDIA, Visa, Google, Microsoft, and Southern Company. The S&P 500, you got Apple, NVIDIA, Microsoft, Amazon, Meta, Tesla, Google, Broadcom, Google Class C, and Berkshire Hathaway. As we go over to the sector weightings, the top 3 sectors are usually technology, healthcare, and financials. You got industrials in there too. As we go over to the market cap and regional exposure, you could see here all 3, they're basically invested giant, large, and medium-sized companies, and most of the investments are in North America. If you haven't hit that subscribe button, guys, what are you waiting for? Hit that subscribe button. Now, as we go into the conclusion here, is it worth buying Jepi, or should we just buy the S&P 500 index fund? I am a dividend investor close to retirement, so I'm looking for income and yield and, some growth. So for me, Jepi is worthwhile. But if you're a beginner and you're just starting out and you're not really diversified, it's better to go with an S&P fund, be it the Schwab SWPPX or something like a VU. VU is a lot more pricier, and if you're just starting out, because of the cost of the ETF, which 990 compared to about 550, would be easier for you to accumulate some more of Schwab. And with Schwab, you don't have to buy the whole ETF to share. You could just buy parts. With $1, you could start investing. So it all depends on your situation. Thanks for watching, guys, and have a great day.